As a collective group, I think it's over. I think that it's not over for certain stocks within that. I think we're going to see in the next 6 to 12 months a divergence in the FAANG. And specifically, I think companies like Netflix and Facebook are going to kind of fall off. And part of it is just the size of their addressable market is relatively limited. They're doing great, but they don't have the addressable markets to sustain in that group. It's a different league when you think about Apple and Google and Amazon. And so I think the collective trade will probably be very different. I still think, obviously, Facebook and Netflix will be successful companies, but I think the outperformance within that group is going to come really from Apple, driven by Apple, and to a less extent, Google and Amazon.
Do we have to consider them when we think about Facebook and Google now as sort of another key player when it comes to digital ads?
I think we do, and I actually think that that media, when you think about the publishing industry and the challenges they've had with Facebook and Google, it's a similar pressure on them. One of the most interesting stats is the number of Alexa devices, of Echo devices that are in Americans' homes. There's an estimate that about 23% of U.S. households have an Echo device in their homes, which is a vehicle for commerce. It's also a vehicle for advertising. And if you listen to Bezos's remarks over the last few quarters, you can see that he's very preoccupied with Alexa as being the thing that ties Amazon's businesses together, which is also potentially an advertising vehicle as well.
Yeah, Gene, it's kind of a funny quarter because we're talking less and less about the core retail business, which didn't put up incredible numbers, may have been a disappointment to some, but we're talking more about advertising. We're talking more about 100 million Prime members, or, of course, Amazon Web Services and its acceleration of revenue growth. How do you view it?
I don't think the stock should be up today. I think it should be down a few percent. I would start with that point, and the reason is that being at all-time highs with a growth story doesn't equate to, even with the great profitability and the surge in their advertising business, doesn't make sense that I think that the risk-reward here is for the shares to be up. Setting that aside is that I think we're entering a slightly different phase of growth for Amazon, slightly lower, like a traditional company, kind of growing in the mid to high teens percent, but more profitable. So when a company goes from a revenue growth story to an earnings story, usually there's a little bit of a hiccup. So that's what's front and center and how I'm thinking about this more near term. That said, the stock could trade down over the next month. I think it probably will. But that said, it's still clearly a leader, and they can disrupt so many different businesses, whether it be content or healthcare, still on the come. You got to bet for them longer term.